Hey everybody, Chuck Barone. Tuesday, March the 7th, 2023. Big day today. We knew this was the day this week with Chairman Powell in front of the Congress today, in front of these senators. Kind of went as we predicted it would go on the show. We'll get into a little bit of that later. But first, as always, we want to welcome everybody to the show. We appreciate you guys being here. Your support means the world to us. And we have a lot to talk about today, guys. So, getting right to it. Markets today. Well, Powell talked. The markets reacted pretty dramatically. Stock market just taking a mighty dump today. The Dow down 574 points. NASDAQ down 145. S&P down 62. Big moves for the market today. I think, Powell came out. Notice it really shouldn't have been a surprise to anybody that he was very hawkish. He didn't really say anything as far as their monetary policy that, would, in my mind, is anything different than what we've been hearing. He did talk about, the language he used kind of said that we could be getting a bigger hike coming up even next week. I think they're meeting the 14th of March will be the rate hike date. So we're going to get some news on rates next week, and from the tone and the language, Powell made it sound like a half a point could be on the table for next week. The market immediately went to pricing that in, which now, affected the bond market pretty dramatically today. I think there's a real possibility it could happen. These inflation numbers have been stubborn. The Federal Reserve's entire credibility is on the line here, man. They can't afford, if they can't afford to screw this up, guys, they have to do it right. They only know the method that they know, and it's a method we all know. They need to suppress this economy. They need to dampen demand. They need to force even a recession, a bad recession if they have to make the numbers happen. So the market's reacting to that because it sounds like, they'll say, holy crap, this time they're serious. It sounds like that's the way the market bought Powell's testimony today, reacted horribly, stocks cratering. Probably not likely going to be much of a rally this week, depending on how employment numbers go on Thursday. Bond market today, quite a weird day in the markets, right? So the 10-year basically sitting flat. No change at 3.98%. So the 10 years here, 3.98%. The 2-year, which should be below it, right? In a normal market, in a normal bond yield. The 2-year up 11 basis points today, 501. Oh. So now the inversion, 103 basis points. Remember, I was just asking on the show yesterday, you think it'll ever get above 100? I know, that's the target we were looking for. Now we're there. I do believe the biggest inversion was 114 basis points. So now, that's our next target. Can we break the all-time high? This is the signal. And this is really, now the market's really signaling. And I think that, an inverted yield curve is not a super reliable 100% indicator of a recession. But when it's there, the inversion has been there before every recession since 1950. And I think that this one is going to we're going to get a recession here coming this year, I think, guys. I don't know how they're going to avoid it and make their inflation numbers. The Fed is going to engineer this inflation. 103 basis point yield inversion. Wow. Crazy times, man. So a 2-year treasury, 5% per year. Not a bad deal, guys. And what's happened now is people are way more willing than they used to be. It's much easier to move money around to chase these yields, right? So we'll have a little bit more on that later in the show, too. Dollar today up big, man. Wow, monster move by the dollar today. Thank you, Chairman Powell. Up 1.33 on the index to 105.63. Dollars, with rates, if the Fed's going to continue to raise rates, the dollar's going to continue to be strong. 105 is, it's just kind of been between 103 and 105 for a while now. Now it looks like it's kind of was on the drifting down. Now it looks like it's coming back up pretty strongly. going to wreak havoc in commodities, guys. And it's as shown today by gold and silver, right? So gold today down $32.80 per ounce to $1,813 per ounce. Silver down 98 cents. Boom, $20.06 per ounce. Maybe gold and silver buyers, here's your opportunity. You know, if silver goes under 20 bucks, it's probably going to look pretty attractive. It would to me. But that strong dollar, you know, we got to keep our eye on that because it's going to really suppress metals prices. Oil today also, commodities prices down. Oil down $3.22 per barrel. Barrel of West Texas Intermediate at $77.24. I was talking about it on the show yesterday. The trading range is between 75 and 80 per barrel. Yesterday it broke above 80. I was saying, oh boy, let's see if they can hold it here. Not even for 24 hours. Right back into the trading trough where it belongs. $77.24 per barrel. Bitcoin today, not a great day for Bitcoin. Down $314, 22,102. Not really a big day for Bitcoin. I think just down with the rest of this stuff on a strong dollar. But interestingly though, you remember natural gas? I was talking about how nuts that market was. It went to $9 per contract. Huge prices. Everybody, right? Our gas prices here in Nevada went up. I just wanted to sneak a peek. I stopped reporting on gas because the market was just so volatile. I looked today, a contract for 1 million British thermal units, natural gas, $2.66. Are they going to reduce natural gas prices now that the prices collapse completely? We know they don't lower prices once they raised them, right? But just goes to show you, man, it's still as crazy as ever in oil and gas. News you guys need today, let's talk about Powell. So he goes up in front of the Congress today, highly anticipated. Everybody thinking and wondering how it was going to go down. I kind of gave you guys a little bit of a tip-off to what I was expecting yesterday. Remember I said months and months and months ago that the era of easy money was over. The idea of 0% interest rates, 3% mortgages, the way we've been living here for a long time, and really have had super ultra low interest rates pretty much since the dot-com crash in 2000. We had, rates spiked back up a little bit in the early 2000s, but after the big calamity in 08, rates have been down and stayed down to keep the economy going. Well, now we have this inflation. We knew they were going to have to get rates back to what is, I guess the definition of normal is different for every person, but let's just say for normal market rates, right? A normal mortgage rate is probably 6% or so. That's normal. But what happened is with these ultra low rates, they drove prices to the stratosphere. So now that's adjustment happening. But I think all of this confirms what I was saying many, many months ago. This era of easy money is over. This era of free money, of painless borrowing for eternity is over. The big loser in all of it, of course, is going to be the government, because they're the biggest borrower in the history of the world. But it's going to affect consumers too, and it's going to affect behavior. If you're being punished for charging crap on your credit cards, you're being punished with punitive rates and payments, that tends to change behavior. At the same time, if all of a sudden the money in your savings account starts earning some interest and that you can actually see, it's not measured in pennies anymore, right? That might motivate you to save more money. So this is just going to be a societal change. It's going to happen. It's already started now. It's established. The world's going to have to get used to more expensive money. The economy is going to have to adjust to it, and it has pretty seamlessly so far. I got to admit, now rates have not been high for very long. We're not anywhere near the peak where they're going to be. We don't know how long they're going to keep rates elevated like this before they panic and start chopping them back down. But Powell's message today was, not now. Oh no. They're going to keep rates elevated. They're going to raise them higher. Talking now, it went pretty quickly. Talk above a terminal rate above 6% now. which is another half, which is basically, they were talking 5%, then it went to 5.5, which I said would be 5.6. Now they're talking 6.0 of 6.1. Could very well happen, guys, this year, right? So Powell gets up there. Of course, like I said, you would happen yesterday, getting hammered by both sides. The Republicans framing their questions in such a way to blame the inflation and all the bad stuff that Powell's fighting on the Biden administration. Powell fighting back on that. Then you had the Democrats coming in, talking about, of course, you had Elizabeth Warren going crazy, saying by your projections, unemployment would have to go up to 4.6% if you continue to raise rates the way you've told us you're going to. Do you have anything to say to those 2 million people who are going to lose their jobs? And, fighting for jobs, like, every other working person isn't paying higher prices. Which is worse for our society? Permanent inflation or temporary bump in unemployment to 4.5%? I think Elizabeth Warren is a little bit off base, as not surprisingly. The hysterics of this stuff. A stable dollar is like the benchmark duty of the government and the Federal Reserve, man. So the idea of fighting for a few people's jobs over fighting inflation, defending the dollar, the world's reserve currency, these people, man, I don't know how, these are all Harvard graduates too, man. What the hell are they teaching at Harvard, guys? Powell comes out very aggressively. He says that more aggressive hikes might be necessary. Went into some detail on that, which forced then the bond markets to correct quickly to price in a 50% basis point this week. He said even himself, looks like a 6% Fed funds rate is possible. I think that, this 50 basis point jump this month is very possible now. Inflation was coming down nicely. Then we had a little bit of a sticky part here. I think the markets are going to want to see the Fed be tough. And adding they know they're going to raise 50 basis points over the next couple of meetings anyway. So doing it, in one meeting, I don't think causes a market collapse. I think it would send a strong message to the market that the Fed is serious about fighting inflation, which they should be. But Powell really spooking the market because he doesn't have a lot of finesse, this guy, right? He doesn't speak in code like Greenspan did. So he just says it like he sees it, I guess, a normal person, not a politician. And the way he laid it out was just super hawkish. As a result, markets going crazy. And now I'm guessing tomorrow will be another fun day for him on the Hill. Democrats today, the thing that blew me away is, so they have an opening, Brainerd got moved to Biden's economic council at the White House, resigned her spot at the Fed. So they have an opening for a Fed president. And here's the Democrats not talking about we need to hire the best person we can get. This is a crazy time. We need the most talented, the smartest, we need the best guy for the job. No. Now making everything stupidly political like they always do. They're insisting that the Fed take a Latino banker into the Federal Reserve. They've never had a Latino, I guess, banker on the Federal Reserve Board. Menendez, Cortez Masto from Nevada, and a whole bunch of the Latino senators demanding. I saw it as demanding. They maybe didn't frame it that way, but the message was pretty clear. Guys, this is just so lame, man. We need the best people we can get in all these goddamn government jobs. And instead, we got to hear this nonsense, man. So anyway, this whole Powell thing today was not great. Very strong language. He'll be back on the Hill tomorrow. I want to see if he'll come out and take a softer tone, temper his remarks a little bit to try to get a little bit of a bounce from this market today. I would not be surprised if he did. I'm not saying he's going to take and change the policies he talked about today that spooked the market. I'm just suggesting the tone and the way he describes the moves he wants to make will be a little bit softer. Not great today. Not a great job, but not great performance by Powell or the Congress. Today, Morgan Stanley coming out following Bank of America last week, warning of a stock market crash. 26% decline, Morgan Stanley says we could have. Bank of America right around the same number. Now, these guys are looking for 25% declines in the stock market. I mean, we all understand that higher interest rates are going to slow down business. None of this should be a surprise. The Fed has telegraphed every single thing they've done. They've been raising rates for going on a year already. And now the market's finally figuring out that these hikes could actually affect their earnings. Oh, wow. And Wall Street warming up to the fact that stocks are likely going to finally hit a wall here. They're already very negative with the higher rates. Once the economic downturn comes, and it will, because the Fed is going to force it, it could get sketchy a little bit for stocks. Wholesale prices, wholesale inventories fall in January. Inventory had been pretty bleak in the fourth quarter. Sales were down, inventories were piling up, things picking up nicely in January. Auto inventories down 0.4%, good month for the auto industry. They said wholesale sales, right? Selling at wholesale, jumped in January at a pace where wholesalers could empty their shelves in 1.34 months, down from 1.40. So inventory is getting leaner, the pace of sales picking up. That's good news. Funny thing though is, these inventories that have been piling up actually added on to GDP in the fourth quarter. So as they eliminate these inventories, it's going to knock GDP down. Who knows? Maybe actually a good month for wholesalers moving their inventories out could finally be the number that pushes GDP negative and shows a recession. Who knows, guys? It's stupid out there. And finally, wrapping things up today, banks. Our friends, the banksters, Bank of America, Wells Fargo, and our big bank buddies, finally being forced to raise rates on deposits. They did not want to do it, but now they have to scramble for the money. I think it's great. Investors have much more freedom and can move money around much more easily than they could back in the day when I was a young lad. So people with money now chasing higher yields, especially in the savings account where there's no risk. If you can have your money in savings bank A and it pays you 1%, and you can put your money instead in savings bank C, which will give you 4%, well, it's a pretty big quadrupling your return. Chances are you're going to do that, and it's pretty simple to do it now. So the banksters finally being forced to compete and raise rates. The free market and all that stuff they talk about? Well, they're finally competing, doing it under duress, complaining every second because it's going to ding up their profits, because they've been actually making money by charging higher rates but not paying them out. Wonderful, wonderful strategies, right, guys? Maybe that guy can get gypped out of a $7 million bonus and only have to live on $2 million a year like the rest of those poor CEOs are doing. I would like to fail like that, wouldn't you guys? Anyway, so banks raising rates on their depositors. Hope, double check yours. If you got a savings account and you have money in that account, probably makes sense to find out how much interest they're paying, what are the prospects that they'll pay more down the road, and to look for something competitive. If not online in your neighborhood, maybe you can earn a little bit more money on your money. Anyway, guys, that's it for today. We really appreciate your support. Tomorrow's another big one. Thursday with jobs. This week's going to finish pretty interestingly. I think these markets are now, let's see what tomorrow brings. I think that the tone has been set now for this week. It doesn't look, the chart for the Dow today just looks not good at all. Just pretty much a ratcheting down day all day. So let's see what Powell does tomorrow. Let's see how these markets react. Maybe we can find some good news somewhere to get a little bit of a bounce from this. Of course, we're going to bring it all to you. As always, we appreciate your support. We appreciate you guys watching these videos, your likes, your shares, your questions and comments. Back again tomorrow, bringing you up to date as always. In the meantime, guys, take care. See you tomorrow. Thanks.